So, good evening to all. Let's start a new session on income tax. In this session, we are going to discuss about the core part of income tax, that is salary. So, let me share the screen with you. So, as per your syllabus, we are dealing with term called salary, and we are considering tax year 25-26. Am I audible to you all?
Yes, sir.
Okay. So, last lecture we discussed what is income and what is taxability. We discussed about assessment year, person, and so on. So let's talk about the first part, that is what is salary income. Salary is a form of income which is received for most working professionals. It is understood as a financial wealth in exchange to the work done received by a person. It can be money, or it can be kind of money, or it can be barter exchange. So what is the amount I received for service performance? It is called as a salary. For taxation, salary and wages, they are being considered as same level. So what is legal definition? As per Income Tax Bill 2025, salary includes wages, pension, gratuity, fee, commission, perquisites, and profit in lieu of salary. So as per latest tax bill 2025, it contains wages. Now, normally we consider wages are paid to the workers who are working on daily basis wages. But for tax, salary and wages are same. Then pension, if anybody is getting a pension, it is also considered as an income. The gratuity means it's a benefit of your retirement. It is an award for working tireless service with the organization. So last rule was, if I'm providing service more than 10 years, I'm giving gratuity. But so when I'm giving gratuity, it's a reward for being associated with the company. Whereas fees and commission, these are charges which I'm charging as a salary. If I'm working on basis, if I'm working on commission basis, it is my income. Then perquisites are nothing but the value added benefits I received, which is extra to my salary. For example, I received car, I received servant whose salaries are paid by company. So these are perquisites. Allowances are those things which are complementary to my job to make my job or working proper. So they are not taxable. Whereas perquisites are incentives which are provided as motivation to me beyond my salary part. So it is taxable. And the last part, profit in lieu of salary, is that salary which is given as an additional benefit for not availing my leave, or for a special purpose if I achieve some target or not. Now, salary is due from current or former employee, arrear or advance. It is taxable in all cases under the salary head. So, even I received next year salary in this year, it is taxable in this year only. If suppose it is paid or payable, received or receivable. If I receive in this year, it is taxable in this year. It never take in concern prepaid, postpaid, outstanding. For them, the golden rule is you received or receivable, whatever things for the year, they are counted as a income for that purpose. In broader perspective, salary can be said as an employment reward paid for either delivering goods or service as having relation employee and employer. If there is no relation as an employee and employer, then the term of salary will be questionable and we need to prove in court of law that this is an additional income. Now let's understand what is salary. Salary is the income source for the most of the taxpayers. It helps to count your income for tax filing. If I do the proper classification of salary, it helps me to analyze my tax exemptions and do the proper filing of income tax return. Optimizing salary structure and increasing my take-away salary will always beneficial to me. So normally when it's a marketing person, their takeaway salary is less and their allowances are more. So the tax burden on them is minimal. Whereas for other people, takeaway salaries are more and allowances are less. So for them, the gross salary part is more taxable rather than compared to the other people. Now let's understand what is the basis to charge salary as income. The timing when salary becomes taxable is a crucial for proper tax planning and compliance. When I receive salary, what is the format I receive salary, and whether it's a regular salary, it's a bonus, it's an incentive, that all terms will change the tax liability, the amount which I received from my employer. So now I'll discuss. Salary is taxed in the year when it is received and allowed even if it is not due. For example, I supposed to receive salary of month of March to be paid in March. But if salary is paid in April, it was outstanding in March but received in April. So paid or payable, which is earlier, it will be considered as due date. In many cases, salary is also paid in advance. So the advance as per the accounting terms is considered as a prepaid and it is asset. So if I received any prepaid or advance salary, it is again considered taxable. Whereas previous year salary will not paid in previous year but paid in this year. Now here there are two clauses. If I paid the tax already in last year, then I do not require to pay the tax in this year for last year unpaid salary. Whereas if it was due in last year and not paid, and even the tax is not paid, then I'm being taxed on such salary which is as received. So, as per law, salary received or due, whichever is earlier, I'm going to tax for the same. Any doubt so far? Thank you. Now, let's talk about tax year concept. For taxation, I follow a 12 months period which is considered for taxation. Now, what is period? It is period start from 1st April of year and ends on 31st March. When I am paying tax in 2025-26, it will call as assessment year, for which income earned in 24-25 will be charged. That is, the assessment year will be the previous year of financial year for which I am paying a tax. So, to make it more clear, suppose I have to pay tax in 25, my financial year for taxation it will be considered 24. And whatever the income I earn in 24, it is taxable as my salary taxable. So, in income tax, if my assessment is in 25, my financial year is 25, then tax payable will be for year 24. And whatever the years before 24, they'll call as the previous years. So, like financial year, The taxation year also fire runs cycle of 1st April to 31st March. Please remember, in case you are employed within a year by multiple employees and you are getting more than one Form 16, it is clubbed together to recognize period of 12 months as your taxing year. And if any employee is not paid or payable, it is not relevance. Received or receivable in tax year, whatever the amount, it is considered for income tax purpose. Now, what are the different forms of salary? Because when we talk about salary, we call it cost to company, CTC. It contains different parts, a basic DA, HRA, CLA, city living allowance, professional tax, provident fund, and so forth and so on. So let's talk about some of common basic forms of salary. A basic salary is a minimal charge which I assured or employee assured to receive from employer. For calculating any other allowances or bonus or incentive, this base salary will be served as a purpose, this served as a component on which other components are calculated. Dearness allowance is allowance paid which is linked with inflation. For example, in economy, if the prices of basic components are increasing by 10%, my dearness allowance is also paid. Now, dearness allowance is calculated as a percentage of my basic salary. Now, why this dearness allowance? This allowance is to make an easier commitment towards attainment of living expenditures in inflation. Now, the question is, if it is recession, what happens? Now, if it is recession, dearness allowance is not withdrawn. It is maintained at same rate. But if it is increasing, it is increased. So, dearness allowance can be plus, but cannot be minus. So, for example, my basic salary is 10,000. My allowance is 50%. Then my basic salary 10,000, its 50% is 5,000. So my dearness allowance will be 5,000. And my total salary, that is basic plus DA, will be 15,000. In case the cost of goods has declined, it declined from 10% to 5%. So it doesn't mean my dearness allowance from 50% reduced by 5%. No, it will maintain at same rate of 50%. And while calculating tax, it is calculated of percentage of basic salary. If again that inflation increases and cost of living increases, then dearness allowance is normally announced by government, and based on that government allowance, the fixation of salary is done. There are called as 6, 7, 8, 9, and 8 pay scales, which are as guidelines, and based on that, other people follow dearness allowances. Now, bonus and incentive, they are linked with performance. If I perform outstanding, I receive something called as a bonus or incentive. These bonus and incentives are known as additional incentives for my regardless work. These are known as financial motivation to perform more and more better. The bonus is tax exempted if it is provided to all. But if I'm providing a bonus to the only specific employees, it is again taxable. Then commission or fees. The commission means it is a contribution I received for performing some task. It can be direct or it can be indirect contribution. If I represent somebody and they like my work, they can provide me commission. Commission can also be charged for acting as an agent or for somebody for some activity, and that commission will be considered as a part of salary. Whereas fees are nothing but the charges which I'm paying for availing services. It can be transportation fees, it can be mobile charges, or so on. They are also components of my salary. Now, before perquisites, there are some more part of salaries for any person. Let me go with whiteboard. So one is my basic salary. On basic salary, I calculate dearness allowance. Once I have dearness allowance, this whole amount will be considered for my other things. Now, the first thing is called as HRA, then city living allowance, that is called as CLA, then my traveling allowance, then any other allowance. So, my taxation will be calculated after combining all these. Now, normally we have house rent allowance, city living allowance, traveling allowance, and depend on my job, other allowances are there. Now, what are other allowances? It can be telephone, it can be cleaning, or anything. So, in case I'm calculating the total income, it should compare to all. Now, what is house rent allowance? This allowance is provided as a reward of rent for understanding my income. Whereas city living allowance is an additional allowance when I'm residing in metro city, it is provided. But traveling allowance is an allowance which is provided if I'm not providing any transportation to transit from my home towards my work domain. And other allowance are those allowance. For example, it can be laundry allowance, it can be tiffin allowance, it can be any other allowance which I received as a specific which is related to my job. But all these allowances are calculated based on my basic plus DA percentage. And only DA is part which is calculated on my basic salary. So I'll share again PPT. Okay. So components of salary are basic plus allowance plus perquisites plus bonus plus incentives and plus commissions. Now let's move further. What is meant by perquisites? Perquisites are non-monetary benefits which are provided to employee by employer as a motivation or as an value appreciation because he has contributed more toward productivity, more towards organization. So what we can say, perquisite is that amount which is calculated against the assets which I'm holding or which I'm getting as reward for my more work. Normally, the perquisites are example house, car, chauffeur. Now, chauffeur meaning is driver. Then employee stock options, interest-free loans or concessional loan, any membership, any personal expenses, and so forth and so on. But for our tax purpose, these are the major common perquisites. Please remember, allowances are always linked to your job, what work you are doing, whereas perquisites are not linked to your job. These are always additional benefits provided more than what the monetary value you are getting from employee. So these perquisites are taxable under certain cases and they are not taxable under certain cases. One golden rule for taxation of perquisite is they are taxable if they are used for personal purpose, and they are not taxable if they are only used for office purpose. For example, if car is provided to you and it is maintained by employer, if you use only for business purpose, it is not taxable. But the car provided by employer you use for personal purpose, it is fully taxable. There are other conditions. In coming part, we can discuss about these perquisites in detail. Now, let's talk about the most important allowances. Allowances, if I divide the word, it is allowed once for all. It is an additional amount beyond salary is paid to meet the specific expenses. These expenses are to make you employable. For example, if I am residing in hazardous air domain where the production requires to undergo very drastic chemical changes, in that case, I need to take a medical expenses. Then I receive medical allowance. If I'm daily traveling 60, 70 kilometers and reaching to my work, and my employer feels it is very punishment to my side, he can provide me the concessional transport, that is allowances. So for allowances, I'm receiving as an incentive to work for my organization. If allowance is provided to all, it can be any allowance, it is normally tax free. But if allowances are provided to the specific person or single person, then it is fully taxable. Now, what are the common allowances? The first is house rent allowance, second, leave travel allowance, medical reimbursement, and conveyance allowance. Now, as I said, house rent allowance is the allowance which is properly charged as a capacity or amount given for maintaining residence in particular operational city. If the house is self-occupied, the house rent allowance is fully taxed. But if I am living in rented house, I am exempted my house rent allowance as a taxable up to the limit I am paying the rent. For example, I am receiving house rent allowance of 10,000 and my rent of house is 9,000. So up to 9,000, the amount received as a house rent allowance, it is free. Second, if in case my house rent allowance is 10,000 and I am paying rent of 15,000. So house rent allowance, if it is less than house rent allowance, it is at actual exempted from tax. Whereas if the actual allowance is more than house rent allowance, then HRA will be exempted. So the upper limit will be HRA and lower limit will be actual part. So we can say three. First, my HR is 10,000 and my house rent allowance is 10,000 and I'm paying rent of 10,000. Then 10,000 is fully exempted. In reverse case, my HR is 10,000, but I'm paying rent of 5,000. So only 5,000 is exempted from tax because it is lower than limit of HRA. But in case of HRA, suppose house rent allowance is 20,000 and my rent paid is 1 lakh. So whatever the extra 80,000, it is fully taxable. Then the part is leave travel allowance. Leave travel allowance is the expenses which are provided to enjoy a leave, a concessional. If a person is taking leave travel allowance for India for his family and dependents, including self, then only for two journeys in a 4 year he is allowed this exemption. If he take this concession more than two times in a 4 year block, his third and fourth or remaining more than that leave travel allowance will be fully taxable. Please remember, based on grade pay, leave travel allowance concession is charged. In case you are traveling international for personal purpose, that leave travel allowance is fully taxable, irrespective of you travel once in a 4 years, twice in a 4 years, or how many days. It is not compulsory. It is fully taxable. against that employee's part. Then we talk about medical reimbursement. If there are three things, hospital is run by the employer, then whatever the expenses at actual, they are fully exempted. Condition is that the injury or medical symptoms are result of your work environment. If it is run by your employer but not owned by employer, then the expenses which are paid as a medical bills are evaluated on similar hospital in nearby premises, and only the lower side will be exempted. Whereas if not a hospital but only allowance is given as medical, then up to 15,000 per year medical bills are exempted from taxable part of your salary. Then conveyance allowance. Conveyance allowance is nothing but my traveling for from my home to work. Now this percentage has a limitation of 1600 as upper limit. So if I'm following six pay, it is 1600. For seven pay, it is 2400, and for eight pay, it is 3000. Now conveyance allowance is the amount which employer need to pay employee for traveling from his home to workplace. If this amount exceeds the limit of that pay package, for example, 6 pay 1600, 7 pay 2400, and 8 pay 3000, the extra amount paid as a conveyance will be charged as a part of taxable salary. Anybody has any doubt till now? Okay, we'll move further. Now we are working on first allowance, that is house rent allowance. It has three conditions. As I said, the house rent allowance received, rent paid, and basic salary. Now here, metro and non-metro is a criteria. For example, Delhi, Pune, Mumbai, Kolkata, and Chennai, these are recognized as metro cities, whereas other than these cities, all other cities are recognized non-metro. Now these metro cities, your 50% of basic salary is one criteria, and for non-metro, 40% of your basic salary is the criteria for calculation of house rent allowance. So when I received house rent allowance, I have to find out what is actually house rent allowance I received. Then rent paid minus 10% of basic salary, or 50% of basic salary, or 40% of basic salary, depend on type of city. Whichever the lowest, I am being paying as house rent allowance. For example, my basic salary is 30,000 per month. House rent is received 15,000 per month. But actually, I'm paying the rent as a 10,000 per month. So in this case, my actual rent is 10,000, and how HRA is 15,000. So the condition one, actual HRA, it is 15,000. Condition two, rent paid minus 10% of salary. Now my basic salary is 30,000, minus 10% will be 3,000. So I pay the rent 10,000 minus 3,000. My rent paid will be 7,000. Now, if I'm living Delhi, it's a metro city. So 50% of basic salary. So my basic salary is 15,000, sorry, 30,000. So its 50% is 15,000. So if I consider three conditions, actual 15,000, rent paid 7,000, and basic salary, it is 15,000. So whatever the lowest, it is exempted as house rent allowance. Now in this case, 15,000, it is equal to the third condition, that is 50% of salary. So the lowest part, rent paid, that is 7,000, is actually exempted. Now suppose I received 15,000 and 7,000 is exempted. Then in this case, the additional amount of 8,000 is fully taxable. I need to pay the tax or exempted amount. Anybody has doubt in HRA calculation? Okay, we'll move further. Now we'll talk about the most important part, perquisites. Perquisites are that part of non-monetary rewards or incentives or value added to the part of my salary for giving me incentive of my work. It is also recognized as non-monetary motivation to perform my task more better and more cost effective. Now, how the perquisite valuation done? Valuation of perquisite involves it is first added to the part of your salary, and then the exemptions are calculated to find out the taxable perquisites. The first and most common perquisite is employee stock options. Now, what is employee stock options? Companies just distribute their part of share capital to the person who has joined as a ownership. So, if I'm joining, suppose for Infosys, after 2 years, they will give some part of capital as employee stock options. Normally, when they give the employee stock options, they are always given at discounted price because it's an honor to get an employee stock options. But when I'm valuing for the tax purpose, they are exercised as fair market value on the date of transfer. So if the stock or shares of X company I received of 5,000 rupees and its market price is 8,000. So whatever the less value, if suppose out of 8,000, 5,000 is charged to me, then the taxable value will be 8,000. I am not allowed to exempt for discount reasons. But in case of employee stock options, if employee receives stock option at a premium price, that is fair market value plus additional profit, then the higher price is also considered for employee stock options as a chargeable value. But where fair market value is equal to employee stock option, then fair market value will be considered as valuation of perquisites. So when I received the employee stock option as a dividend, as a share, as a bonus, equity shares, or anything, these all are valued at fair market price, and then the amount paid by employee is deducted, and the remaining part will be fully taxable. The second is employee provident fund. Now there are two types of provident fund. One is employee provident fund, that is EPF, and second is public provident fund, and third private provident fund. Now, public provident fund is general fund where the other person contribute for 15 years as a locking period, and normally they are paid a tax-free interest of 7 to 9% per year. Whereas employee provident fund is that amount where employer and employee normally contribute equally. The provident fund's English meaning is fund which is used for emergencies in future. So these funds are compulsory for, and each employee is required to pay the provident fund when his salary is between 3,000 to 12,000. If a person is having wages up to 3,600, he required to pay ECS, that is Employee Insurance Scheme, and under that scheme, all the medical expenses, his daily emergency expenses, all are accounted. But if salary is more than 3,600 and up to 7,800 a basic salary, or your basic plus DA up to 16,000, then that person is liable to receive the provident fund as a compulsory. After 16,000 as a basic salary, if your income is anyhow low or higher, it is not mandatory to pay the provident fund. Now, as per rules of 2025, this limit is raised up to 25 lakh to 100, that is 50% of salary is added to this. So provident fund is considered as one of the perquisites if it is provided in special case. The next valuation of perquisites is employees accommodation. Now accommodation can be in a hotel, or accommodation can be in rented property, or accommodation can be owned property. Suppose accommodation is provided in a hotel. In that case, the whatever the extra, suppose for example, for living at normal place, the accommodation charges are 5,000. But I am paying rent in a hotel of 10,000 per day. So whatever the extra 5,000 I am paying, that is more than the said amount, it is taxable. The second case, suppose it is provided as rented property, then the rental property and actual, they both are compared and the valuation is calculated. For example, if rent is paid 20,000 and the similar property in that localite has 5,000 as a rent, then lower part will be exempted and the difference, that is 20,000 minus 5,000, 15,000 will be taxable. The third case, if house is owned by company and it is free of cost provided as accommodation, then in such case, similar accommodation in that same locality will be evaluated, and as per government ready reckoner, the value of perquisite is calculated and same value will be charged as value of perquisites. Now there are two concepts in accommodation. One, furnished, and second, semi-furnished. The accommodation, when provided with the furniture, it is called as a furnished accommodation. But rent, when rent is provided without furniture, it is called as unfurnished. And when provided with furniture, it is called furnished. For any furniture provided, it is always accounted as a market price. They are never calculated as a cost price. So when the rent is evaluated at market price, then the 10% of that particular value of furniture, it can be any furniture, it is calculated as cost of furnishment. So the basic previous rule plus this 10% cost of furniture will be called as value of furnished accommodation. And in case the furniture is not provided, then this accommodation 10% additional cost of furniture will not be there. There's one more other reason. If the furniture is rented, then whatever the value of rent, it is calculated 10% of that rent, not the cost of furniture. Suppose I'm having a furniture and employer do the repairing to that furniture, then the repairing work is added to the cost of furniture before calculating 10%. In reverse, suppose this repairing is done by employee for employer's furniture, then from cost of furniture, the repairment work is deducted before calculating 10% cost of furniture. So, furniture and accommodation, if I combine, it will be called as a furnished accommodation. And hence, accommodation is another perquisite which is most important for tax liability and tax calculation. So far, any doubt? I'll go to the next perquisite, that is company vehicle. Now, company vehicle, we talk about two things. One, a driver. Second, its maintenance. If a company provides a vehicle to the employee for commuting from home to work or for work purposes, it is freely, there is no tax on that. But if the vehicle is provided and used for personal purpose, then it is fully taxable. But where the maintenance of vehicle is done by employer, then in such a case, the CC of engine and the use will determine tax liability. Normally, if my vehicle CC is less than 1.8, in India we call as 1800 cc. or 1.8 liter. It is valued at 1200 rupees if I use for personal purpose and driver cost will be 500. But if it is more than 1.800 cc, it is valued at 3300 per month with driver, and without driver 1800 if the cc is crossing a certain limit. In some case, suppose only fuel is provided, then actual expenditure on fuel is only recognized as taxable event. So we have three conditions. One, a repairment. Second, fuel charges. Third, driver. So in all case, your driver will be taxable, but only condition I need to observe CC of engine, that is engine capacity. More than 1.8 liter, it's 3300. Less than 1 liter, it's 1800. And if driver is provided for 1.8 liter and down, it is 500 extra. So with driver, it is 2300, and without driver, it is 1800 if the vehicle engine capacity is below 1.8 liter. If it is more than 1.8 liter, it is 2700 per month plus the 600 for drivers. Now, if vehicle is taken on rent and provided to the employee, in that case, the CC again followed like 1.8 or more, and on same basis, valuation of perquisite will be done. Now, suppose the vehicle is provided by employer, and in case of any accidental damages or any perhaps whatever the additional burden employee pays, it is tax exempted. But suppose any additional burden employer pays and it is added to the value of that vehicle instead of only security, then that is not allowed as a tax exemptions. Any doubt so far? Now let's talk about impact of perquisites. As I said, for salary, all allowances if provided to everybody, it is not taxable. But in case of perquisites, it is even though provided to all, after certain limits, they are taxable. There are no tax concession. So when you are filing a CTC, that is a cost of company, concentrate on allowances rather than the perquisites, because allowances are always significantly deducted from taxable income, whereas perquisites are not allowed as a free. Medical facilities, subsidized meals are having partial exemption, but again the condition that these are provided to all. If only provided for certain people, then it is taxable in the hands of that certain people. So for me, if I'm planning a tax, I should talk about how much I'm getting perquisites, how much I'm getting dearness allowance, and how much I'm getting other allowances. Now, now in income tax, before moving further, there are two type of employees. One, a normal employee. Other is called as specified employee. A normal employee is that person who is working and no management interfere or share he is having. But whereas board of directors, managing directors, or CEO, or any other owner who is working in company, they are known as specified employees. Normally, characteristics of specific employees that they are not receiving salary, but they are receiving fees and commission as part of management. So for all them, each perquisite is fully taxable. They not received any tax exemptions. Only salaried people they receive tax exemptions, but for specific employees, they are not allowed any exemptions of perquisites. Now, the next part is what are the permissible deductions as per the income tax bill 25-26. So let's talk about the same. The common deduction, professional tax, PF, and health insurance are the commonly allowed deductions. Now, standard deduction is the amount which is calculated based on my that financial year's inflation index. Now, last year it was 50,000 allowed as standard deduction. Previous year it is 35,000 as standard deduction, and for financial year 25-26, 75,000 is allowed as standard deduction. Now, what is part of my salary? I can straightforward deduct 75,000 as deduction for maintaining my livelihood in current inflationary prices. So standard deduction is the amount which is commonly allowed as exemption. Then the professional tax, which is monthly 200 or yearly 2500, whichever is applied. In all these cases, up to 2500, it is fully exempted. So from part of my total income, I can deduct 2500 as professional tax. Then, if I'm making contribution to the Provident Fund, then under Section 80C, up to 1,50,000, I can claim the tax exemptions. Similarly, under Section 80D, health insurance premium paid for self up to 25,000 and for family up to 37,000 are fully exempted from taxable salary part. Now, please remember when I calculating salary, Section 80, Section 10, and Section 24, along with Section 10, they are most valuable for getting some common deductions. Whatever the four numbers I'm showing on a screen, they are mostly common for all. So these are certain examples of deduction. Beyond this, under Section 80, there are total 12 subsections for which the deductions are allowed from salary. So 10,000 if my salary, then after calculating taxable part, I can deduct these common deductions to find out what is actual liability of tax I'm going to have. So let's find out how deduction works. For example, my gross salary is a 10 lakhs. My standard deduction 75,000, professional tax 2,500. Then when I deduct these two part, I get income from salary. So the professional tax and standard deduction are reduced from my gross salary to calculate my income from salary. And now when I get income as part of salary, then I can apply the deductions under section 80. It can be 80C, 80D, 80E, 80F, 80GG, and so on. In section 80C, the limit is allowed 1,50,000, whereas section 80D limit is highest 37,500. But please remember, for each section there are certain laws, and I can club more than one section of section 80, but not beyond the upper limit mentioned in that. So once after income from salary, I deduce the all the allowed exemptions. What I get is a taxable income. Once I get taxable income, I need to charge the tax based on this taxable income. I'm not charged on 10 lakh amount, but I will be charged on 7 lakh 47,500 because after deductions, I'm receiving this amount. Any doubt in how deductions are calculated? I move further. When you're doing a tax planning, what things you need to do? You need first understand what are the components of your salary, what is basic payment, what is dearness allowance, what is perquisites, what are the other benefits you're receiving. Segregate based on the tax liability you are going to arise. Don't stress beyond capacity to fall in a trap of excessive taxation. For example, if salary up to 12 lakh is tax free and you are claiming some allowance which makes your salary 12 lakh 10,000, then your exemption up to 8 lakhs will be recalculated and you are fully taxed. So leave up or give up, that part is more important. So when I receive a salary of 5 lakhs and I find out after 4 lakhs there is a huge tax. So I decided to give up my salary. Then whatever the give up part, it is also counted. Foregone salary and give up salary both are taxable in all cases. What I said, my liability is crossing 12 lakhs and I need to pay 50% tax if I cross 12 lakhs. So I declare that I forget salary of 2 months. I don't want 2 months salary so that I'm in limit of 12 lakh. No, it is not allowed. Forgo of salary or miscalculation is always charged as a fine. That's why rule of salary is paid or payable and taxable in all cases whichever is earlier. So I cannot forget salary I cannot give up a salary. Yes, I can give the salary, but source of income is me, then I need to pay the tax. Similarly, if I'm receiving income more than one source while filing an income tax return, the clubbing of income is always done. I cannot claim that one place I'm getting exempted salary, second place I'm getting exempt salary, so combinedly my salary is exempted. No. For tax treatment, the two salaries are combined together and then exemption part is calculated. If I received tax-free allowances from more than one source, then only one source of allowance, or I can say only one source of tax-free allowance is considered for calculation of salary. If I'm claiming a deduction, for example, deduction for housing loan is claimed by one partner, same deduction cannot be claimed by other person. So what are the combined deductions if I'm claiming that will be claimed by the first assessee and it cannot be repeated by the second assessee. Similarly, for any deductions, the upper limit is the maximum advantage a person can take, whereas the actual expenses, if less than allowed limit, then actual limits or actual expenses are considered for exemptions. If you want to plan your life to be very healthy in case of income, you have to maximize your allowances than perquisites because maximum allowances like HRA, LTA, PF, these are tax free, whereas perquisites like car, accommodation, these are mostly taxed. So please remember, if you're planning your salary as a better income, go with more allowance rather than going as perquisites. Normally, the tax laws are amended in union budget, which is published as central budget. So keep yourself updated so that what are the new compliances, what are the new developments, you are knowing it. Once you learn about the new tax rates, once you learn about new concessions, it is very easy for you to make and tax planning. And better tax planning always help for managing your salary. So that's all for today. We discussed today about understanding what is salary, types of components of salary, meaning of salary, and what are the different prerequisites, its meaning, what are the different allowances, its meaning, and how I can plan for taxation. So far, anybody has any doubt? Anybody has any doubt? Now, I talk about income which is chargeable as salary. And next lecture, we will talk about something called as income from additional source. Now, this income is added to your salary part. So, this is basically section 56. Once we finish section 56, we'll talk about calculation of total income and filing a return. So, this is what we are planning for today. Next lecture, we will talk about income chargeable under heads of other sources. Then we'll discuss more about understanding income from other source, what is their components, why it is important, the key heads under that, and how they are making impact on my total income. So if in doubt, I'll wait. Otherwise, we'll close for the day and you can go for next session. Anybody has any doubt? If your doubt, you can just put in chat box. Okay. Since no doubts, I will close for the day and we'll meet it tomorrow evening for the same topic, that is income from other source. Before that, it is suggested that please read this content so that in explanation part it is more clear to your side rather than only listener. So thank you. You can join the next session now.